Hey everybody, it's Chris Butel with Cleveland Street Mortgage, and I just wanted to get this out there. You guys, many of you have heard about the new um, increased pricing Fannie and Freddie are implementing for certain types of loans, specifically second homes, and then high balance loans. For those high cost areas, those counties. For example, in the Washington area, Seattle, King, Pierce, Snohomish County. But the second home hit is particularly pernicious. It is as you can see here. What I've illustrated here are what the G fees are. That's what they Fannie and Freddie call them guarantee fees, or G fees for short. And this is before April 1st, 2022, and then after April 1st, 2022. And essentially this is going to be, whereas a par rate would have been 0 points, that same par rate after April 1st for loans delivered April 1st or later will be 1.125 points. And what I've done here is just to say, okay, let's take the maximum conforming loan amount, 647,200, and at a 60% loan to value, the difference is 1.125. So that's a $7,200 increase in cost, and that's obviously not pleasant, but it gets much worse. If you're just putting 30% down, then the cost goes up to 10,000. If you're putting 25% down, the cost goes up to 13,000. And this is incremental costs, right? This is what it costs more than before. If you're just putting 20% down, it's 21,000. If you're putting 15%, it's almost $27,000. So, really, really significant. There's a small window of opportunity right now. Many banks are already implementing these fees because this is for loans delivered to Fannie and Freddie, before and after April 1st, and sometimes they take, some lenders take a longer time to get those there. And so many banks are already implementing these costs. So there's a small window now if you have borrowers under contract that aren't locked in at the lower rates before those fees were implemented, to get them locked in. The lenders I work with, at least one of them so far has not implemented that fee and won't do so for a couple of more weeks. So there's a window there to kind of salvage, some significant cost for people, or even salvage the deal. So keep that in mind, but be aware that that's coming, and that's going to, essentially what it's going to do is going to drive up interest rates. People probably won't pay that extra cost; they'll just take a higher interest rate on these second homes. Now, silver lining is that many of these second homes are expensive homes, and you'll be in a jumbo loan, and generally these fee adjustments won't apply to jumbo loans. This is Fannie and Freddie only. Now, this next section here relates to high balance loans, and again, this is only for high cost areas that have a second tier of Fannie and Freddie loans before you get to jumbo. The 647.2 is for every county across the nation, and then certain high cost areas, King, Pierce, Snohomish, and Washington State. Every state, or many states, have these. There are also adjustments that are coming to those as well, but they're not nearly as dramatic. Obviously, they're still painful. Nobody wants to pay $4,800 more for a loan. But bottom line is, if you are selling second homes, just prepare your clients for that. If you have an opportunity right now to get them locked in before these take effect, if their lender already has implemented them, some have not. So have them, reach out to me. If it's Washington State or Idaho, I can do that. But or you can reach out to me and I can refer you to someone as well. Thanks so much.